down the value of their U.S. business. We have more ahead on the Asia trade. This is Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Take a look at how Japanese assets are trading, with the equities falling for the first time in 5 sessions. We're hearing from the Finance Minister Katayama saying that they're considering revising corporate governance codes, that corporate governance reform is a priority, and that Japan will add support for firms before and after listing. Of course, this theme has really propelled the Japanese equity markets. We're also watching JGBs because the finance minister just recently announced plans to increase their issuance of short-term bonds. So we were expecting short-term yields to firm up, and that's happening with the 2-year yield rising to 1% for the first time since 2008, April.
Sherry, the FII Priority Summit, meantime, is taking place in Tokyo, and it brings together key leaders and policymakers from Saudi Arabia and Japan. The summit's focus will be on robotics, AI, trade, and global supply chains. Let's bring in our first guest from the event. Rishi Kapoor is Vice Chairman and CIO at InvestCorp. Rishi, really good to see you. We've just been talking about Japan and some of the stimulus needs and the push. Talk to us about what you are seeing there.
Well, hi, good morning, and thank you for having me. I think what we are clearly seeing from our vantage point as a global private markets focused investment firm at InvestCorp is the emergence of this corridor, if I may call it that, of capital flow, trade flow, and investment flow between Japan and the Middle East, routing itself through and via India in particular, but ASEAN broadly speaking. And that corridor of bidirectional trade and capital and investment flow is really what is very interesting for firms like ours to tap into, because for the first time, it's, like I said, it's bidirectional. And more importantly, it's also opening up a world of opportunity for us to deploy capital behind in areas and sectors of high conviction and potentially high return in the future.
Rishi, is this flow through the corridors that you speak of going to be agnostic of the BOJ's path? Do investors need to see hike for more conviction?
I think that's a great question. And To be honest, I think the BOJ's path is actually one of the underpinnings for this corridor to emerge and cement itself the way I described it. Because for the longest of times, for many decades, the growth trajectory for Japan in general was relatively muted in terms of nominal GDP. And with the emergence of some degree of acceptable normalized inflation in the Japanese economy, whilst a continuing relatively low interest rate environment behind it means that the prospect for strong, attractive returns for equity investors in private markets, but also, arguably in public markets, are very strong over a medium to long-term horizon. And that's really what is giving rise to that increasing investor interest. That is, of course, supplemented beyond what the BOJ does by the emergence of a large set of opportunities within certain sectors, many of them related to technology and innovation, but also related to energy transition and infrastructure, both digital and physical, that support this increase in interest for capital flows between the Middle East and Japan. And I think last but not least, the work that the BOJ is doing in terms of enhancing governance in particular and regulatory reform is an important pillar of how we see this market evolving.
How does the weakness of the Japanese yen factor into your calculations on investments in Japan?
Well, look, the weakness of the Japanese yen today obviously provides an attractive entry point for new investment activity into Japan. But the key over here is what happens in the future. If the yen continues to weaken, that would obviously not be a great thing for a foreign investor denominated in a different currency. So I think some degree of expected policy stability around the currency as we look out over a medium-term horizon would be greatly helpful and positively impactful for investors as they consider investment opportunities in Japan, facilitated by the current yen weakness, as you said.
And Rishi, you've seen opportunities both in China and India, right? We continue to see the economic slump in China in the economic data that we're getting recently. What are the opportunities in these two countries, and do you have a ratio of how much of your investments go into these two economies?
Well, today, look, Asia in aggregate, including the Middle East, is a relatively modest part of our overall portfolio, about 10%. But it's 10% from a very small, very low level over a very short period of time. So it's growing really fast. Now, as we look out into the future, it would not be surprising at all for us to see a continued growth trajectory in our investment portfolio in Asia, including India, Japan, and China. All of these economies, by the way, there are certain macro characteristics that one can debate all day long. But what is more important is the micro characteristics, choosing the right sectors where there is going to be a flow of capital, there's going to be an appropriate balance of risk and reward, and where one can expect to generate some attractive returns over a medium-term horizon. As I said earlier, in Japan, those sectors relate to business services, technology, infrastructure. In China, the energy transition is a very interesting theme, as is domestic consumption. India is almost all about domestic consumption across a variety of sectors. So, we see a lot of opportunity there. And last but not least, in the Middle East, just the very significant impulse that the local governments are providing to the build-out of regional infrastructure and enhancing domestic consumption as well as consumer services provides a very interesting backdrop for investment as well.
Rishi, what would you say is the biggest risk for both public and private markets in 2026?
From our vantage point, we think some of the key risks in 2026 from public and private markets really are going to be around the degree of stability or uncertainty related to interest rates, particularly in the US, because there is a bit of a tussle right now between, whether the Fed in particular is more worried about the inflationary impulse resulting from slightly more sticky inflation, sticky wage inflation in particular, but also the impulse from tariffs to inflation. And on the flip side, the slowing employment growth is the opposite side of that same coin. And I think that degree of uncertainty around the future trajectory of interest rates is probably an overarching concern for us, because to a large extent what the markets have underwritten or discounted currently is a continued trajectory of lower interest rates. To the extent that doesn't manifest itself at the levels that the market is anticipating, that could be somewhat problematic for market levels.
Rishi Kapoor, really good to have you with us, Vice Chairman and CIO at InvestCorp. We have more ahead on the Asia Trade. This is Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Hong Kong's government has moved to stamp out mounting public anger after the city's deadliest fire in nearly 8 decades. Let's get to Hong Kong, and our China correspondent Ming Min. We have new details on how the fire started.
That's right. At a press conference last week, the authorities said that the fire had started with the green mesh, but preliminary testing, they say, show that the mesh has in fact met fire compliance standards, fire resistance standards. And they are now putting the blame on the styrofoam boards that are covering the windows, because that is highly flammable and it has melted or caused some of the windows to burst, which then caused the fire to move into the building. So it was both spreading outside and inside the buildings. And the fire department explained why they couldn't use helicopter to throw down water bombs, because they said that would only douse the exterior of the buildings with water. But the powerful downdraft, they said, would create more oxygen to cause the fire to spread even faster. And an interagency task force has been set up to now investigate the cause of the fire, because now there are speculation about how that happened, right? Whether people were smoking, and the task force has started to look into that, and also to look into why the fire spread so fast.
Min, there were also some further arrests made. What can you tell us?
Yeah, so additional arrests, an additional 8 arrests made to other consultants as well as contractors related to the scaffolding, but also 3 more arrests has been made on national security grounds, including an unidentified volunteer, a former district councillor, and 1 person who started an online petition demanding 4 demands from the government to take care of the victims, to take accountability for this, and also to start an independent inquiry. So there seems to be concern that the public anger needs to be controlled.
We're running up into a hard break. Sorry I have to cut you off there. Min Min Lo in Hong Kong. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Take a look at how markets are trading across Asia. We're seeing a little bit of a divergence with the Nikkei and the topics down at the moment after 4 sessions of gains. We continue to see a weaker Japanese yen, strengthening a little bit today, but still after 3 months of losses against the greenback. JGBs is what we're watching right now, given the finance minister's plan to issue more short-term bonds. So 2-year yields now rising to 1% for the first time since 2008. And remember, in about half an hour's time, we do have the Bank of Japan Governor Ueda speaking today. So we do want to watch out for whatever comments that we can get about a potential rate hike in December. This coming at a time when the Kospi is holding steady. The Kosdaq is gaining a little bit of ground, a little bit of divergence continuing from the Friday session. The government will announce tax incentives and other measures to boost the market. Avril.
Yeah, Sherry, I mean, we've been talking about today how the China factory activity numbers will also be shaping trading in the Asia session. Let's get you up to speed with what we're getting on these global PMIs based on manufacturing for the month of November out of major economies across the region, including Japan. We are seeing it versus the prior reading a bit deeper into contraction territory at 48.7. And of course, we are also tracking what's come out of South Korea below the 50 level at 49.4. And some of these other perhaps a bit improved readings from the likes of Taiwan as well as Indonesia. That's picked up to 48.8 for Taiwan and 53.3 for Indonesia. Of course, this is all coming against the backdrop of investors and economists trying to figure out the pain given the trade turbulence we've been seeing of late, Sherry.
Let's head to our next guest, who leads Japan's largest ever buyout fund, investing across multiple sectors. Joining us exclusively here in the Tokyo studio is Carlyle Japan co-head Kazuhiro Yamada. Kazuo, always great to see you.
Nice to see you. Thank you for having me.
So you raised almost $3 billion last year, right? So how much of it have you deployed or committed so far?
Yes, we this year, we made 2 investments so far, and also we are now making a so-called due diligence for 4 deals. So we expect to do another 2 deals is committed by the end of this year.
So what is important in these deals to you?
Yeah, it's there's lots of good quality business, and but I also undermanaged and the resources. So I think those opportunities are great potential to grow domestically and also globally.
Are there any specific sectors that you're more focused on?
Yes, we have 3 sectors. We're very keen on, and one is the manufacturing sector. Since there's a variety of good products manufacturing, but not enough resources to global. And the second is healthcare. Healthcare is also a growing sector here in Japan. The third is maybe so-called software and also SaaS business. And the keyword for our target is one is the great business, good business, quality business, but undermanaged, under resources. The other one is great technology enabled to increasing the productivity. That's a 2 key theme for us.
Kazuhiro, Errol in Singapore, in terms of some of the more successful plays that you've had, this includes for your exit in Orion. Can you tell us about what the strategy is going to look like going forward, especially when it comes to exits, and why are public markets the right route?
Yes, thank you very much. And Orion is, great brand and a great quality of a product, but mainly selling in Okinawa. So we made several initiatives after investment. One is the higher enhancing management layer, CEO, CMO, and also global sales, top of global sales. The second is increasing product lineup, including RTD and also liquors. The third is enhancing global sales. Before we invest, after invest, global sales make 4 times larger than that. So there's a significant improvement on the revenue side and also profit side. As a result, EBITDA margin growth of revenue and also ROE is top of peers. So and also strong brand with a clear equity story. So we think IPO is a right route for our exit. And also before we invest, we committed to founders, family, and also management. If we try to have this company IPOable company, and if we can do definitely we have IPO for the exit. And Carlyle is already a 10 global offering IPO. I think it's highest track record IPO exit. And as a result, we had 80 times demand from the market. So I think it's a very successful IPO.
Are you thinking of doing a bit more of the same with other firms that you have in the pipeline? Can you talk us through the thinking behind that as well?
Yeah, we have a 3 industry team, TMT and consumer retail, healthcare, and manufacturing. I mentioned before at the this program, and each team has about 100 potential company, potential opportunity. And we realize there's a significant opportunity from succession and also delisted corporate carve-out. And so there's a bunch of attractive opportunities here in Japan. But in order to access those opportunities, local network and the reputation, track record is quite important.
It sounds like a very busy time for you. Did you manage to hire everyone you wanted to hire at this point?
Yeah, that is top of my mind, and it's very difficult to hire the top talent here in Japan. But not only for the hiring, retention of an existing professional is a kind of a challenge. So maybe 40% of my time is spending for retention and human resources.
Human resources. So I remember you said 10 more investment professionals this year.
Yes.
Is that still the target? Are you there? What about next year?
Yes. Now we become a 30 professional. End of next year we also committed 2 more. And by the end of next year we're going to be at 35. And one of our iconic things is that 10 out of 35 going to be a female. So it's a new kind of a trend. I think diversification is quite important for our business.
We have heard, of course, of these drives in order to improve corporate governance, and of course, diversification is key. Finance Minister Katayama just now speaking at the investment forum saying exactly the same thing. Are you seeing those trends continuing, having momentum here in Japan this year and next?
Yes, definitely. Corporate governance is one of the key for leading growth of Japanese economy, and also diversification is quite important. As you know, our society face decreasing population. So why we leverage female capability? So this is significant underutilized. So I think that trend going to be a continue.
Kazuhiro, talk to us about what you're seeing in the M&A landscape more specifically into 2026 and perhaps in the year ahead as well.
Yeah, this year, compared with the last year, first half number is significant. Actually, total M&A is more than 3.6 times, and the buyout market is also over the 4 times. I think it's not a one-time phenomenon. There's a significant opportunity, corporate carve-out and also delisted and also corporate activism. And so I think that trend is going to be continue. And next year, maybe we're going to be more busy.
How does the weakening Japanese yen factor into your calculations, especially when it comes to exit valuations or M&As as well?
Yeah, fortunately, our fund is a yen denomination, so not a significant impact for considering so-called investment criteria. But in fact, the yen depreciation is impact to our portfolio level, particularly sourcing material is quite high. So we are careful about supply chain and also price increasing opportunity. That's a main concern for us.
Do you have a base assumption of where the yen goes from here?
No, it's very difficult. If I know, I put all my money into foreign exchange. But basically, we have some so-called version, so-called best case and worst case, and we make best case and worst case or each transaction.
I guess it all comes down to trying to guess what the BOJ will do next as well. But at the same time, just because the rate hikes coming from the BOJ have not necessarily helped boost the yen. When do you expect policymakers to move, and does that make a difference for how the businesses that you're looking at here in Japan operate?
Yeah, I think foreign exchange rate is it is very difficult to control. So while maybe in Japan, Takaichi cabinet is put economic stimulation and have create a more kind of a deficit. So I think it's not easy to come into yen going to be appreciate. But in the end, Japanese economy is growing up. I think it's going to be yen going to be appreciate. That's my expectation.
Long term, just because of the strength of the Japanese economy.
Exactly.
Do you think that the new administration is helping in that push towards economic growth?
Yes, definitely. Current cabinet is very eager to stimulation or support for economic growth. I'm very surprised. Very short time, Ms. Takaichi introduced several economic initiatives in detail, and also with a massive supporting plan. So I think it's first time to see Prime Minister change and immediately introduce such a stimulation plan with a detailed plan. I think I expect a lot on Takaichi-san.
Kazuhiro Yamada, really good to have you back in the Tokyo studio, co-head at Carlyle, Japan. We do have more ahead on the Asia trade. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we count down to the start of trade in the Greater China region, we're watching Meituan when trading gets underway in Hong Kong after it reported its first loss in almost 3 years, reflecting the impact of intense competition in China's food delivery sector. Our Asia equities reporter Sang-Mi Cha joins us from Hong Kong. Sang-Mi, what are you expecting?
Yeah, the Meituan shares are already the worst performer among the Hang Seng Tech Index this year. It's still slumping 30% YTD. And it's because of the intense competition that you just mentioned in the domestic on-demand and food delivery sector, right? It was always that monopoly, always the first and always the best in terms of the delivery services. But after JD.com and Alibaba all came into the sector, it's just struggling a little bit. And the CFO just Friday had said that, it is because of this brutal competition and price wars that they're seeing these bleak earnings result. But it is the similar strand that we're seeing in Alibaba and JD earnings as well. And Morningstar analysts actually predict that from 73% gross transaction value for Meituan in 2024, it's going to slump and it's going to lose that shares to 55% in 2027. So now looking at that, Alibaba, though, they predict that it will actually gain more shares from about 21% to 40%. So what we're expecting is going to be somewhat more of a duopoly.
Yeah, and you mentioned the price wars really depressing earnings, right? What does this mean for investors then that are suffering from losses in Chinese markets at the moment?
That's correct. So the MSCI China Index members have seen 1.1% negative earnings surprise for the July and September quarter. And because of this, a lot of the analysts are saying that this is because of the anti-involution push that Beijing has had for months. It is not really working to curb that competition again within the market. Again, it's the same story that goes back to the price wars in delivery market. But most of this was because of the real estate market and soft retail spending, so the consumer dragging down the index. But of course, it's not always the bad news. We've seen great sector moves for materials and financials. So materials companies companies have benefited from the gold rush, really. So the likes of Zijin Mining and Jiangxi Copper have done really well. Their net income rose by more than 50%. So all of this does point to some of these bright spots in the market. But again, the anti-involution push, for us to see the results, analysts say we have to wait until next year.
Asia Equities reporter Sang-Mi Chao there. And some of the other top corporate stories that we're tracking at the moment, Micron will reportedly spend $9.6 billion to build a plant in western Japan, making memory chips for AI applications. The Nikkei newspaper says Micron wants to diversify its advanced chip production outside Taiwan and plans for shipments from 2028. The report says the factory will make high bandwidth memory chips a key component for working with AI processors from the likes of NVIDIA. South Korean authorities are investigating a data leak at Coupang that exposed some 33 million accounts. Yonhap News says the alleged hacker is a Chinese national who previously worked at the U.S.-listed online retailer. Police began investigating after a formal complaint from Coupang, which says it became aware of the leaks on November 18th. Airlines worldwide are scrambling to update software on the Airbus A320, the most widely flown commercial jet in history. Carriers say they've rushed through an emergency fix after Airbus stunned the industry Friday, calling for so-called precautionary fleet action. For more details, let's bring in Bloomberg Global Business reporter Angus Whitley. Angus, what a surprise during the holiday season. Is this a done event, or are we expecting more fallout?
This on Friday, as you say, this was looking like a serious crisis because it was a software upgrade that was going to affect 6,000 Airbus A320s, which is, as you said, the most widely flown commercial airliner ever, right at the end of the peak Thanksgiving travel period. So what we saw over the weekend was a frenzied effort by A320 operators to address the software upgrade and the glitch. And really remarkably, within 24 hours of the emergency directive from the European regulator and the FAA in the US, operations are pretty much back to normal, particularly amongst the major A320 operators. They include American in the US, Indigo in India, EasyJet in the UK, and Wizz Air, which is a Hungarian discount airline, addressed all its A320 issues overnight. So it was pretty remarkable. But if we avoided a crisis, I think this issue does highlight some key factors which regulators and airlines probably have to address. The first is, I guess, it's aviation's key man risk, how much concentration there is of the A320 in the global fleet. The global fleet is about 30,000, 35,000 aircraft. And so if you have an issue affecting 6,000 planes, that's about 20% of the global fleet that needs to be rectified. And that's a serious issue. And the second question is, how could sophisticated flight software be effectively fried by solar radiation, which is what happened in this case? So it's key things that regulators will have to look at in the future.
Yeah, it also raises the question, given how it was a bit of a shock, cosmic radiation was as an issue, are we looking closely enough at some of the gaps? How are plane makers looking to address future gaps?
Yeah, that's a good question, because if you look at the A320, this is a tried and trusted aircraft. This is, flies millions of passengers a day, and it's sold upwards of 10,000 models. So regulators will have to look at the upgrades that go through in these aircraft. A320s are famously fly-by-wire, which means that they're effectively digitally controlled for the most part. And software upgrades, still have to be scrutinized. And Boeing knows all too well that the 737 MAX suffered to horrendous fatal tragedies late 2018 and early 2019 due to software malfunctions on its 737 MAX. So the regulators will have to be aware that even though these are tried and trusted aircraft, got years of very safe performance, they still have to be looked at and question how these upgrades can be affected by, it's effectively natural phenomena like solar radiation.
Some continued scrutiny given this latest incident. Angus, thank you so much. Our Bloomberg global business reporter, Angus Whitley. And we'll be speaking to one of the largest operators of A320s in the world. AirAsia CEO Tony Fernandez speaks to Bloomberg exclusively on Insight with Haslinda Ahmed. We have more ahead on the Asia trade. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Yields reaching record highs across Japan. We are seeing the 2-year yield topping 1% for the first time since 2008. This after we got more insight into the finance minister's issuance plan in order to support Sanae Takaichi's government expenditures. The issuance will be in short-term bonds, 2 and 5-year JGB. So we are expecting firmer short-term yields and perhaps more curve flattening throughout the week. JGB issuance in the 10 to 40-year bracket is not happening. So we'll continue to watch the latest developments in the JGB space, as we're also watching the yen, a little bit more strength in today's session. But after weakening for a 3rd consecutive month against the U.S. dollar, the Carlyle Japan co-head Yamada just spoke to us saying that he sees the yen gaining in the long run, given a stronger Japanese economy. Of course, we will be looking for clues coming from the Bank of Japan governor, who's due to speak in just a few minutes, April.
Sherry, we are also watching out for how Greater China markets react to that bout of weak data over the weekend, which showed us manufacturing PMIs on its longest contraction on record. And the likes of Bloomberg Intelligence, actually highlighting they expect broad economic weakness and that the numbers actually hint at a further downdrift in consumption, because if you look at services, that also dropped sharply into contraction. This is a sharp contrast to a flat reading in 2024, and then put that together with what we saw from Meituan, right? The first loss in a couple of years, and this is coming with intense competition against the likes of Baba and JD. So all this eating into their margins as well. We'll watch how that plays out in trade today. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China Show is next. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling, the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence. This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now. And very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the lights air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3. Then, you know, I mean, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Mann with David Ingles.
We are cutting down to the open-up markets in Greater China this Monday. Let's get to your top stories today. A extremely cautious start across markets today. December, of course, first trading session. You had factory activity coming out of China on the weekend, contracting for a record 8th month. We get a private gauge later this hour.
China's food delivery wars see Meituan posting its first loss in almost 3 years and a warning of further damage to come from the battle with Alibaba and JD.com.
Also ahead, China's property crisis in focus as Vanke's latest woes pressure offshore bonds, a delay to monthly sales data adding to some of the uncertainty out there. And as Hong Kong warns its fire victims, the government is warning of action against anyone deemed to be stoking unrest. Right, we're looking at some declines across these equity markets as we kick off a fresh trading month, fresh trading week. We're down about 1/3 of 1%. We are getting some fairly hefty pressure coming through across U.S. futures, not normally moving a lot, not to the extent at least we're seeing currently for this time of the session. We're looking at a lot of data coming through. We'll recap some of the PMI numbers we get from a whole slew of Asian economies about 30 minutes back. We had the gauge, of course, coming out of China. We have a private gauge coming out this hour. On top of all that, other things on deck, risk aversion out there, 0.7 to 1% on the Korean markets. Right, dollar, U.S. 2-year yields were fully priced now for the Fed meeting, which is in about 10, 11 days or so. As it pertains to Japan, also on the monetary policy front, we now have a 1% handle for the first time in many, many, many years on the 2-year yield. We are expecting to hear from the central bank governor anytime now. We'll bring you the latest there once we have more information there. A focus specifically on metals today. Silver and especially copper, with both, in fact, now trading at record highs. So we're looking at copper futures as well in Shanghai coming up on your screens very shortly. That should see a follow-through move following the move in London on the LME, at least 11.3 right now on copper there. The China one is coming online. Bitcoin obviously is pulling back 4.2%. I should also point out this broad wave of risk aversion was something we did not specifically wake up to, and it certainly just caught somewhat momentum in the last 60 minutes or so. A50 futures coming on your screens. Dollar China 200 week moving average. We'll get you a chart in a moment, but there we go. That's not the copper contract, but yes, we'll talk about the copper contract a bit later, and it's COA commodity. Anyway, let's have a look at other things on deck today.
Well, as you mentioned, I don't think we were foreseeing this sort of risk aversion, right? When we were talking about December was supposed to be that month where things are looking better, and that this pullback in November was maybe just a one-off. And now you're talking about the macros weakening again. When you take a look at the China PMI number and the 8th straight month of weakness that we've seen, you pair that with the Meituan earnings, you got to wonder, have we actually seen the peak of the intensity of these e-commerce price wars?
Yeah, I'll throw in the resurgence of the property.
Vanke,
Vanke and the property wars, right? So we know a big part of the economy isn't doing well, and that's really shown up in the earnings story, right? The big tech plays that have a very big component to sort of B2B, like Alibaba, the cloud business is doing well, but the B2C business, Meituan, is almost purely a B2C business. It's really showed up in the form of earnings. So that's really something that we'll see today, and of course Meituan will be getting first reaction to the earnings coming through today. On top of that, monetary policy, that's just to say we mentioned this, we're up 1%. Likely, is that going to be a rate hike out of the BOJ? If not December, it's January, of course. Now, we're fully priced as far as the Fed is concerned in a couple of days now.
Yep, and we are seeing right now, it seems like the Bank of Japan Governor Ueda is speaking in Nagoya, so we'll bring you any sort of updates in case we do see that as well. In terms of your agenda for Greater China today, so we talked about, of course, the currency moves that we've seen when it comes to dollar China. The 200-week moving average is certainly one thing to watch very closely here. We have the rating dog China PMI number coming out at the bottom of this hour as well. Still watching what's going on with Vanke, property bonds as well. We've been talking about some key sort of milestones that were hit here, and we're watching those high-yield spreads very closely. We talked about Meituan. When it comes to Jiangxi Copper, there's a takeover sort of bid that they're talking about here as well, and Leap Motor as well we're focusing on. The property side certainly is still the struggling one that we're watching very closely in terms of fallout from Vanke, and of course casino revenue from Macau that's happening in November. The November numbers, I should say, are happening later on today as well.
Yeah, also retail sales out of Hong Kong. So yeah, lots to discuss going into the session today. Let's start things off with the earnings story, and the reason perhaps this is taking on slightly more significance, it's really a reflection of really a weak and soft start of the Chinese economy, right? Meituan's first loss since 2022. Red bar is that operating loss, that almost 100% jump from this time last year of operating expenses underscores this intense competition that the company itself alluded to during the earnings release. Let's bring in Catherine Lim, our Bloomberg Intelligence Senior Analyst, joins us from Singapore today. Catherine, good morning. Your first thoughts when you had a look at these earnings coming through?
Yeah, morning. And really, I think other than the loss, one thing that stood out for me was that this was the first time that Meituan actually reported core local commerce revenues declined of 3%. And that really goes to show that it lost market share in the food delivery sector that contributed to the loss. I guess the reality is that they've guided on the loss. It didn't quite surprise me that, it was steeper than expected. And I think market was already expecting the losses to continue in fourth quarter. But, as they've highlighted, the competition is still intense. And, how rational it is going to be they weren't able to actually really give, visibility or clarity to that. And really, it all goes down to, how the market sentiment's going to be, and to what you've also highlighted, earlier, David, Yvonne, that the underlying consumption sentiment in China is still fairly weak. So that really clouds the whole outlook in 2026, and that's going to take a hit, on the stock today.
Catherine, the consensus expectations is still for a turnaround for 2026. Do you think that's still feasible at this point, or is that going to have to be revised lower now?
I think the question really is that, what is the magnitude of that turnaround that we should be expecting in 2026? Is this a prolonged pain that we have seen in other sectors as well, not to name them? And, the question is, we know that they're not going to go back to, the 18% operating margins that they've done in the past, but is it fair to say that it's going to halve, or is it going to be worse than that? As Meituan, looks very determined to try to maintain their leadership in food delivery.
All right, Catherine, thank you. Catherine Lim there, Bloomberg Intelligence Senior Analyst, breaking down those Meituan earnings for us. And still ahead, we're going to take a closer look at China's tech sector as the AI wars heat up. And we're going to hear why Barclays' Zhong Xiao sees no bubble in the next few years, predicting strong progress in the likes of Alibaba and Tencent.
Yeah, suffice to say, we'll also get his thoughts on Meituan, if that wasn't obvious right now. 102 Hong Kong dollars a pop right now going into the open today. Maybe not. We won't be taking out the 100, but we'll see, of course, when things open here this Monday. Right, now our first guest on shows today thinks that China's tech sector, speaking of that broader theme, stands out as a top global opportunity going into next year. Joining us here on set, Eva Lee, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Hope you're well. Let's start off on tech. We now have done with the earnings. This is a really good opportunity, you guys think. Tell us why.
Well, the result actually confirmed that the AI developments of China is actually exceed people's expectation. What I meant is not about capex. I think the U.S. tech developments clearly telling you that it's not about how much you spend. It's about how much you eventually can generate in terms of revenue. So if you look at the time lag between investments versus monetization, China actually have been doing better than that of U.S. if I would really have to be strictly comparing. Because remember in the second quarter results, Tencent, some of the leading portals already telling us how they use AI and generate better advertising revenues, how they use AI to generate or to help them in the gaming development. All this, I think it's crucial nowadays moving forward. It's not about, we still have the capex spending. I know that one of the companies telling you that we have to revise down our third quarter or full year capex in AI, in chips in particular, because China is still, restricted in terms of importing chips from US. But that set alone, the another companies are telling you that, okay, this is our 3-year budget. We are able to spend it earlier than what we expect. So I think this is important that capex spending, okay, so broadly in line, but monetizations is actually far exceed people's expectation. I think that's the key message.
And the way that AI plays out regionally is very different, right? You talk about chips, it's Korea, it's Taiwan, Japan, it's equipment. But you're saying in China, this whole full stack sort of proposition, you say, is more attractive.
Yeah.
Okay.
Because it's yes, I mean, supply chain is important, but there is a certain level that China is still not able to deliver. But on the other hand, because the ecosystem, even before AI, they were very complete. So there are many AI use cases or scenario for them to benefit it from. So I think in US they do have it as well. Not every single company have some have more comprehensive, some have less. Then you now see the share price telling you that. But in China, I think there are 2 big ones and maybe actually 4 big ones. 1 is unlisted, 3 are listed. You sort of see them know, hey, I'm doing this, I'm working on this. And once you're on the track, you're only able to accelerate that because you already find cases in usage of AI.
One of our guests last week, speaking of the full stack and the whole supply chain that you have in China, almost across the board, with some gaps, of course, to your point, told us like the bull case seems clear, but the research coverage and sell-side coverage doesn't seem to be as comprehensive yet, looking at that full stack. And I wonder, is that a hindrance? Obviously, we'll get more coverage, but when you pitch the idea to global investors, how receptive are they when you go beyond, say, the top 5 names?
I mean, this is totally understanding, because when people talk about AI, people seems to be just pointing to 2 companies. But when you look at the through supply chain, exactly what your speaker is saying, there are a few of the actually quite a big part of the supply chain. I'm talking about doing chips. They are actually in the, not even in CSI 300, they're probably in the 500 or some even in 1,000. But obviously not all companies are equal. I mean, there are some of the good ones that are able to manage, to do better and excel. And on top of that, the valuation, some of these companies' valuations are like 70 times. At one stage was 100 times for PER. You're like, oh, should I really look into it? As an analyst, should I, sort of put in the effort to look into it? Exactly. Well, it will matter, but is it too early to look at it now? Yeah.
So you mentioned the optimism around AI. I mean, it seems like the macro is getting weaker, right? You look at PMI numbers, you look at what's going on in the property sector. Can I still just focus on tech for next year for this equity rally to continue?
Well, as we always say, the Wall Street versus Main Street, right? No matter which part of the world, we always have this dilemma. The Main Street, particular for China, you cannot have, for example, consumption continue to be weak, and you expect people would pay this money, in terms of AI or byproduct or like the second derivative of consumption, being AI. So we do need, a better, or at least, some of the structural issue need to be taken care of eventually, or else, purely relying on tech without the macro economy not doing well, it doesn't work.
One of the recommendations for the 2026 outlook is allocate up to 30% of equity portfolios to something related to AI.
Yeah.
Are there any changes to how you've observed people allocating this year that you think they should start entertaining as a new idea going into next year? Or is it more of the same?
Well, I think in terms of people that early in the US AI, they'll be quite concentrated on one company, probably. And we now, particularly over the last 3 months of share price performance, telling you that you should not do that. Like, we are already in the 4th year of the AI development in US. Diversification is crucial. And now you have not just GPU, you have TPU, you have different AI big model. The usage, the applications are very different. I think same case of China. You also need to think about how you diversified. And you maybe the timing, like now maybe I'm more in gaming because I worry about the food delivery platform still going to spend more money. That sort of diversification is crucial in 2026.
Are there pockets of the tech space that you worry about? I mean, I think last week it was the regulators that said humanoid robots. They actually see that space being, a little bit too crowded. Are there parts that you look at and be like, I worry about this?
Well, whenever we are approaching a new sort of technology, humanoid is a good example. You always come to a stage that whether this company can survive. Okay, they talk about 100 robots being delivered this year, and then 10,000 next year. That sort of jump. How's the sort of the entry barrier? Is it like? Hearing all the nice story, it's easy. But if you sort of dig deep into whether you really have the edge and you're able to stop the new entrants coming in, I think that's crucial. We always come into a stage that there are too many entrants and only 1 or 2 able to survive.
We'll have more Eva Lee, of course, will be rejoining us in a couple of minutes there. She's been, of course, with UBS Global Wealth Chief Investment Office. Just to also mention, we just talked about Meituan as a starting point there. We spoke a little bit too early. After a couple of minutes, it does seem we will be trading if not at, will be below 100 Hong Kong dollars right now, so we are indicated lower. Speaking of the 90s, that's also the level to watch when you look at copper in Shanghai. We're just getting warmed up, and we're now an inch or two from that 90,000 handle on the back of copper hitting a record, of course. Metals, of course, is something we're tracking going into the session.
So we're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong on this Monday morning. This is the China Show.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
Welcome back. We'll take you straight now to Japan, where we are getting an ongoing live briefing out of the BOJ. Suffice to say, the comments that have come out so far are largely on the hawkish side. Nothing out of a complete vacuum, of course, but an indication that rates will likely head higher. Acknowledgement that real rate is very low. A hike would be an adjustment to a degree of easing. And if the economy outlook is realized, then the BOJ will be raising interest rates. Just to also say that the yen has strengthened since those comments dropped. And the two-year yield is now at about 1% for the first time, I believe, since 2000. And it's something to keep an eye on.
Yeah, and the fact that he's mentioned, right, FX is more likely to affect prices than before. The weakness in the currency is certainly one thing that, they are concerned about possibly stoking inflation further than it already is. So, directly talking about the currency impacts that it could have. But yeah, he says to make the right decision when it comes to rates in that December meeting as well. But still, I think, I asked some of the economists, they're still kind of, maybe it's a bit of a coin toss at what point what they're going to do in December. But December and January certainly are live. And you're seeing that reflected in markets there. There you go. The yield curve is heading higher here this morning. The two-year yield about 1.01 there. And certainly we're watching that very closely, what happens there. BOJ, of course, meets later on this week. Talking a little bit more about Hong Kong.
Yeah.
And obviously we've been dealing with a lot of mourning and the like here over the weekend. The government has moved to stamp out mounting public anger after the city's deadliest fire in nearly 8 decades. The last week's disaster in the Tai Po district killed at least 146 people. Let's get to our Min Min Lo, our China correspondent, with the latest so far.
Yeah, the latest was, if you remember, last week I was at this distribution center that was started by volunteers, and we heard that on Saturday, the authorities had told them to clear out of the square. The government is kind of taking over that donation drive and taking it online, saying that they will make it more efficient. But you got to take this in context of the other things happening as well, because the Office for National Security had put out a warning against anybody trying to use this fire to stoke unrest and endanger national security. And already they had arrested 3 people on those grounds, including an unidentified volunteer, a former district councillor, Kenneth Cheong, as well as one man who started an online petition making 4 demands of the government, including taking care of the victims, taking accountability for what happened, starting an independent commission of inquiry, and an Instagram page that raised the 4 demands had now been taken down. So certainly it seems like that line between public grief and public anger is thinning, and perhaps the government is worried that I guess you could consider it a mass gathering of people at the distribution center. They're worried that maybe that could spiral into something that is out of control.
Do we have new details on how the fire started?
Yes, so last week the government gave a press conference and they said that the fire started with the green mesh, and they now say that based on preliminary testing, the mesh did in fact meet regulatory standards when it comes to fire resistance, and they're now putting the blame on the styrofoam boards that are sealing the windows, saying that that really caused the windows to shatter, which then caused the fire to move inside the building, so it was spreading both outside and inside the buildings. And the fire department explained why they didn't use the helicopter water bomb, saying that that would douse the exterior of the buildings, but at the same time the powerful downdraft will just create more oxygen and fuel the spread of the fire even further. So now there's still speculation about how exactly the fire started. Some people are saying, were workers smoking? We still don't know, and an interagency task force has been started to look into the exact cause and also what caused the fire to spread so rapidly.
And we continue to watch, of course, the very touching photos of people lining up and, really putting out flowers and mourning really for the whole weekend. It was quite a show of support that we continue to see.
Yeah, we saw thousands of people lining up to give flowers. There were people holding up signs to say that they are giving out free hugs. And of course, the Hong Kong government has declared 3 days of public mourning, right? And they had set up condolence points across the city. And we saw just really raw sort of devastation at the site, because there was this place where family members could go in to identify the dead based on photos, and you see this terrible procession of people coming out just looking completely anguished. And I think the past couple of days, these people had been very dazed and very shocked, and you could very well over the first couple of days be quite at a loss. And, looking at the distribution center there, within 72 hours, it's gone. By the time you sort of, are clear about, okay, maybe I need to go get some supplies, those things are just gone by now. And clearly it seems like, I think many of the volunteers are also upset that their goodwill is now being scrutinized for other, political intentions as well.
What's next to watch here today, in the next few days?
Well, I think the next few days, of course, we are entering a political period, right? Because we have the Legislative Council election
taking place.
That's still happening. That is, John Lee said he will announce if it's going to be delayed. But as far as we understand, based on sources, they understand that it is still going to take place on Sunday. So the public campaigning has been suspended for about a week. They are likely to resume on Thursday. And obviously this incident is going to cast a shadow over the elections, because this is the second election that will take place under the Patriots-only sort of electoral system that Beijing has imposed. And of course, the government and Beijing in particular will be watching for how the election is going to take place. And of course, we have seen police security really ramped up at the site near the fire as well. And I think this is something that will definitely be casting a shadow over the elections.
Min, thanks for the update. Yeah, we're coming off a challenging weekend. It's extremely hard to just try and not be connected to the news.
And actually I also wanted to point out that there has been reports that show that these residents were complaining about these fire hazards early as last year. And the Department of Labor did acknowledge in a statement that they had wrongly dismissed some of these concerns and initially said that there wasn't any fire safety law governing scaffolding, but eventually later on they said that the materials actually met the standards, citing documents from the contractors, but now they have increased the number of arrests to 11, including more contractors and consultants of different companies as well.
Min.
Yeah.
Thank you. Min Lo with an update there of the developments over the weekend into where we are right now. Monday, when you look at this story as we make our way, of course, into a new week here. You're watching The China Show. Plenty more ahead.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
You're watching The China Show, counting down to the open of your cash markets. Hang Seng Index slightly higher, A50 futures also to the upside here. Some strength coming through in the Chinese currency, which isn't new. In fact, at 706 right now, you have to do a weekly, do a 200-day moving average, and you see we're sitting right at about that level. We also just happen to be sitting on a level, I think it's a Fibbo retracement from the trough to peak in the last 5 years or so. We're right at that 50% retracement level. As far as that trade is concerned, it's just to say, of course, it's really been a weak dollar story and maybe a bit across these equity markets. Not all, because we're looking at some earnings reaction too coming through today.
The Fed is in a blackout period now, so
Yeah.
certainly we're not going to get much more in terms of the Fed uncertainty. But as Dave mentioned, right, it's nearly priced in that they're going to cut this month. So certainly that's going to be the key thing to watch here in terms of your mainland markets. This is what the open for your Monday morning is looking like here. We continue to see some moderate gains here for the CSI 300. We're up about 1/3 of 1%. We're watching, of course, some of the commodities, as Dave mentioned there. Silver is at a record high. Copper certainly has seen those gains in some of these mainland futures. We're up about 2.5% for copper as well. And we're focusing a little bit more on what happens when it comes to the tech space, given what we saw with those Meituan earnings. Certainly last week, I think it was Alibaba, which had a bit more of the spotlight back on them after announcing, of course, this Quen app and then this whole kind of new smart glasses that revived the stock a little bit. You have the boards to see how Hong Kong is doing. Capricorn, meanwhile, is down about 0.8% in terms of the chip space here this morning. But today is really about Meituan. And we are seeing, when it comes to the sell side, they are continuing to slash their price targets for the stock. The likes of Goldman, Citi, and the like. Meituan is, there you go, down 2.5% here. We're now at that 100 level.